What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Alibaba Group, ticker symbol BABA. Over the last year, this stock is down 20%. Year to date, down 14%. And obviously, a lot of that has to do with the Chinese regulatory crackdown spree that government has been on. Look, they have slapped down Tencent, JD.com, Alibaba, and Baidu, and it caused ARK funds, which are managed by Cathie Wood and extraordinarily popular and well covered in the stock market. She basically dumped her entire Chinese stock portfolio over the course of about a week as news of this crackdown spread. Now, Alibaba did report their Q1 earnings. We'll get into them. We'll take a look at the revenue, the profit, those types of things like we always do here on the channel. Now, the other thing that we'll do is we'll look at Alibaba from a technical perspective. And I will tell you, I get a lot of questions here on the channel, on my old Alibaba videos and even new ones that I am posting about, is this a buy the dip opportunity? Can you come in here and safely buy Alibaba at these levels? Because look, this was a $320 stock and now it's trading at $200. And I will tell you, there's lots of talking heads out there. There's a lot of analysis on the Chinese government. There are people that know the Chinese government and know the situation there far better than probably anybody. Where are those people's research and decision makings going to show up first? Where is it going to show up first? You guessed it. You're looking at it right here, right on your screen right now. Those people's research, those people's conclusions will show up as price action on a stock chart. So those of you that throw out technical analysis and say it's absolutely nothing, no, what it does show you is decision making, especially in a situation like this where we're not sure what the Chinese government is going to do. We're not sure if the worst is over, but there are experts out there that are making decisions on that. And if they decide the worst is over, guess what? We're going to see a bottoming formation form in Alibaba shares, and this thing will probably start to head higher. So we'll look at it from a technical perspective. Is that around the corner? Those are good questions to ask, and we'll help to answer those on today's video. Now, Alibaba did report their Q1 earnings. All things being considered, sales estimates got missed a little bit, but I think the big news is that Alibaba is confident in their stock, right? Okay, they increased their share buyback program from $10 billion United States up to $15 billion. So an extra $5 billion bolted on to their share buyback program. Let's jump into the Q1 numbers and then we'll get to all important technical analysis on this one as well. Alibaba, not the best at reporting. It's probably a cultural thing. It's probably a regulatory thing, but the way they lay their financials out, not nearly as clear as United States companies, but I'm here to make these as clear as possible and help you understand them the best you possibly can. So we got our commerce revenue up here at the top. We've got the the left-hand column is last year on 2020. This middle column is the most recent quarter. So we've got like year over year here on a quarterly basis. And then this column that says US, this is in the United States dollar here. The other ones are in the Chinese currency, the RMB. These are all in millions. These are fantastic revenue. Okay. So from a United States dollar perspective, our commerce came in at $21 billion. Now they've got some other things here as well. All totaled, we've got very, very close to $28 billion worth of revenue here on the commerce side. Okay, we went from 133 to 180. That's in the Chinese currency. So obviously strong growth. Okay, 35% year over year growth. That's about what we're seeing with a lot of mega cap companies. They're growing in that like mid 30s, maybe a little bit higher for some companies, maybe like a Facebook or a Google, but in that mid 30s is kind of what we're seeing with these mega cap companies. Now, the other thing that I noticed that kind of jumped off the page is this cloud computing went from 12.4 to 16 billion RMB. That was 29% growth. And we just covered Amazon. We just covered Microsoft. We just covered Google. All their cloud computing things are growing a little bit faster. So it could be a number of different things. One, maybe a soft quarter, soft environment over in China. Number two, it could be a regulatory thing as well, that Alibaba is just not going to be able to accelerate their cloud computing as much or as fast as they wanted to because of the regulatory situation. We'll see what happens going forward. Now, what I want to do is also show you the higher level revenue and the profits. This will explain some things a little bit more because they actually missed a little bit on that income from operations. So here's our revenue up here on the top line. We've got our cost of revenues here. Again, the left-hand column is last year, middle column is the most recent quarter, right-hand column is in United States dollars. You see we went on the revenue side from 153 up to 205. This is all in, all-inclusive revenues, not just commerce, but cloud and everything that they do combined. Now, here's all of our expenses here, and what jumps off the page here is, yes, cost of revenue went up quite a bit, but you'd expect that when you bolt on, like, quite a bit of revenue here on the top. What I saw here was selling and marketing expenses, okay, went from 13.6 up to 27, like more than a double, right? Everything else pretty much grew about where you'd expect with this type of revenue growth. That hurt our income from operations down here. Went from 34.7 down, yes, down, income from operations down to 30.8. Again, this is in the Chinese currency. In the United States dollar, that is about $4.8 billion. Now, in terms of, they have some interest and investment income and those types of things, it ends up bolstering that income or that net income a little bit, but I'll stay focused here on this income from operations, that it actually declined year over year, and most of it coming to the selling and marketing expense here. At least that is what I see on that chart. Now, in terms of income, so how much money are they making off of each of these business units? And we've got commerce, and it's a little bit like Amazon, not quite, okay? A lot of Amazon's profits comes from their cloud computing division, AWS, and the rest comes from other parts of their business like commerce. This actually reminds me a little bit more like Google, where the vast majority of their business comes in, or their profits comes in, from the advertising business, and they really don't make any money yet on anything else. And we're kind of still seeing that with Alibaba. Take a look. For the last 3 months, this middle column is the most recent quarter. And yes, they cleared 39 billion RMB on the commerce side, but they lost money everywhere else. But we are seeing levels of improvement, okay? We went from 2.7 down to 1.6 loss on that cloud computing side. Everything else carved into that a little bit, except for this innovation initiatives. Now, from an adjusted EBITDA segment, we see a little bit better story, okay? They are slightly profitable on cloud computing. This probably adjusts out share-based compensations, which is why I showed you the non-adjusted numbers, because these people aren't going to work for free. But what it is showing you is we're very close at Alibaba to actually making money on something other than commerce. And so they are very close. I wouldn't necessarily, they're probably another year or so away, I would guess, looking at these numbers, the way they're decelerating a little bit in terms of the losses that they're generating. We're probably another year away. So that could be a tailwind for the company as well, that they start generating positive income from these other investments that they've made. We'll see what happens there. Now, finally, from a technical perspective, this stock is completely broken down, and I probably don't need to tell any of you that this stock topped out at 320. This was back in October, November of last year, and I'm actually on a weekly chart. I decide, when you're on a steep downtrend, when you stretch things out to a weekly chart, because it gives you a lot of view, a lot of price action on this one. And we created a high here, a lower high, lower highs, lower highs, lower highs. Yet again, this thing is absolutely in an absolute steep downtrend. I probably don't need to tell anybody that, but I am here to remind you that this stock is in a downtrend. And you don't necessarily want to buy stock. In fact, you don't want to buy stocks in downtrends. You want to wait till they show signs of reversing course, because like I said, that is showing you that there's investors out there that are certainly more intelligent than probably anybody watching this video on the Chinese regulatory environment, on Alibaba's chances of navigating its way through that and those types of things. And those people are going to show up here on the stock chart. And are they showing up on the stock chart? I think those are worthy questions to ask. Now, I've seen some area of support down here at 180 that held. This stock bounced like a basketball off of 180 and popped back up here to 190. That is a good sign because from a technical perspective, there is some support for this stock at 170, 180. You break through 170 and 180 on Alibaba, and it absolutely brings 130 back in play, which is really the low that we have not seen since December of 2018. This stock has never gone down to 130 in over 3 years. But if we break these levels at 180 and 170, boy, oh boy, this stock could absolutely get back down there. So now the March lows, like a lot of stocks, sold off in March, but it hit this 170, 180. So the height of the scary virus thing that's going on brought this stock down to this 170, 180. So from a technical perspective, I don't mind this 170, 180 level, okay? Because it has shown as an area where this stock likes to bottom. It likes to bounce here. It likes to consolidate in these areas. So from just a broader technical perspective, I like it there. Now, from a secondary technical level is we are looking for lower highs here, okay? This stock did do a little fake out here, created a lower low here, but it continued to move down. You'd like to see this form a bottom here. Again, we are on a weekly view, so 2 candles represents 2 different weeks. And so I'd like to see this one bounce and reverse a little bit. And I drew a line in right here. I'll wiggle it around here. It's right around $210 per share. I'd actually like to see Alibaba get above that. Okay, it's not necessarily a spot where I think you can safely buy Alibaba down here, but I would very, very carefully nibble on this because, again, this news out of China is still evolving. It's still something that is still a moving target. And so from a technical perspective, we are bouncing here at 170 and 180, but you would like to see this stock make a higher low, which means you need to get above, at the current time, the $210 level. That would be within the next few weeks or so. You get above that level, and then I think you could argue that this stock has reversed from a technical perspective, and you could see some pressure on this stock going back up into the low $200 per share. But we'll see what happens with Alibaba. This thing has been on a very steep downtrend. I don't think the Chinese government is in the business of putting companies like Alibaba, JD.com, Baidu out of business. I believe this is similar to what we're seeing here in the United States, although the governments obviously are completely different. But obviously we have regulators in our country talking tough about Facebook, talking tough about Google, talking tough about Microsoft and Apple and these types of companies. It's probably a little slow. It's absolutely, definitely slower moving here in the United States. So in China, you might actually get the bad news out of the way faster because the government can unilaterally move faster than the government can here in the United States. So in the United States, the quote unquote big tech regulatory crackdown is probably something that's going to play out over years here in the United States. Whereas in China, that government can move and it can move quickly. And when it does a crackdown, it can actually get that out of the way and move very quickly. So we'll see what happens. I wouldn't be running out and opening full positions in Alibaba. Okay. I certainly would not do that. I would wait for some kind of reversal to show up. There is no sign of that yet. Even today's little bounce off of 180 level, it's still not showing me that we've created a higher low here. This stock is still making lows, and we have to assume that this downtrend is intact until it absolutely is not. And so we have to break above this trend. Otherwise, this downtrend is intact and we are moving lower and lower. And we talked about if you break below 170 on this one, it brings back in these much, much lower lows down here to 130. Now we get down to 130 on Alibaba, okay? Over the next few weeks or months ahead, we get down here to 130 and we'll analyze the stock again. But that to me would be an amazing spot to get this stock because that is a nearly 2 to 3 year low on the stock and it probably can't get much worse than that. And you gotta figure the $15 billion buyback is got to show up in this stock chart as well. The lower and lower Alibaba gets, the farther and farther this $15 billion buyback will go, and we'll see what happens. All things being considered, though, I would absolutely not make Chinese stocks a large portion of my portfolio. Can you get a little bit of exposure to them? Absolutely. But would I make them a large position of my portfolio? Absolutely not. You already get some exposure if you own something like Tesla, like Apple, like Nike, those types of companies, Starbucks. There's lots of companies that are doing business in China where I'd much rather own stocks like that than almost a pure play Chinese company, because like we said, the government there is a wild card. The regulatory environment in there is evolving. I wouldn't want to be overexposed to that, but I could see carving out a small portion of your portfolio, especially when you have these big, gigantic drawdowns. And then from a technical level, you start seeing levels of bouncing in Alibaba. So hopefully we answered some questions here on today's show. We'll be back again soon with more. That was Alibaba. Good luck with your investments.